These are some popular questions people have about infinite banking. We're getting these on all our social channels, and I thought I'm just going to make a video that answers a bunch of these at one time. What is infinite banking? How does it work? What are the fees? These are all common questions, and you know what? You should have these questions. Hi, I'm Laurent Meunier with Safe Pacific Financial, and welcome if you're new here, and welcome back if you've been here before. So today, we're going to talk about these frequently asked questions and about how do we do things. Let's start. How does infinite banking work? It's actually very simple. You get what's called a participating whole life insurance policy that builds a cash value that you can access. So you, as the policyholder, you pay the premiums, which are then invested, and they earn dividends, which are reinvested into the policy to buy more insurance. Over time, this cash value inside the policy grows, and the policyholder can access the cash value through policy loans. You can also access the cash values through withdrawals, but we generally don't recommend this. So the advantage is that your money will grow inside the policy from the dividend, and then when you need to use your money, you take a policy loan so you never take the principal out and the dividend continues to grow like if you never took it out. So you get to use the money and grow it at the same time. That's the huge advantage. Second question. What are some benefits of the infinite banking concept? It gives you access to self-funded capital, which you can access at any time without having to go through traditional lending institutions or credit checks. It gives you access to tax-free loans if they're below the adjusted cost base. And then these options are available from the growing cash values that's inside the policy. It also is huge for your estate planning when the death benefit actually pays out. And it can pay directly to whoever you choose as your beneficiary. The death benefit on life insurance in Canada is tax-free and pays out pretty quickly to your beneficiaries. Most of the companies that we work with will pay out a death benefit like within 1 or 2 weeks of receiving your death certificate. So you get to grow your money in a tax-advantaged way. You get to use your money in a tax-advantaged way while you're alive, and you get to pass your money down to your beneficiaries tax-free at the end. There's not really anything else that you can do that operates like this. Another question we get all the time, what are the risks when doing infinite banking? Well, it can be a complex strategy and it's definitely not for everyone. You need to have good money habits, you need to have good savings habits, and you need to have a solid cash flow. So if you're struggling or you're running out of money before the end of the month, this is not a good strategy for you to use right now. It's really important that the policy you use is set up correctly at the beginning to maximize the cash values so that they can work with this strategy. Most financial advisors don't know how to do this because it's actually the opposite of how we're trained to set up these whole life policies. You have to do the opposite of what traditional whole life policies do. Another risk is that you have to pay these premium payments for a long time, and you got to make sure that you keep the insurance coverage in force. So when we work with people, we generally want them to commit to 10 years of premium deposits. This 10 years also cannot be a stretch for you. It needs to be 10 years of premium deposits that you can make no matter what. No matter if there's a recession, you lose your jobs, markets go up, markets go down, you got to sell your house, whatever, that needs to be a solid number that you can commit to regardless. You need the consistency of those premium deposits. The absolute worst thing you can do with one of these policies is cancel it, especially in the early years. In the very early years of your policy, the total cash value probably won't equal the amount of money that you put in. So if you cancel the policy for whatever reason in those early years, 100% guaranteed you are going to lose money. Don't do it. Because we're borrowing money by leveraging the cash values, changes in interest rates over time can affect you. So you need to keep on top of this and you need to be committed to the strategy for the very long term, right? So these are some of the risks of the infinite banking strategy. As far as the actual policy is concerned and the mechanics of the insurance and the dividend paying and how do you get those policy loans, those are going to happen. We're working with some of the largest insurance companies in Canada that have been around for more than 100 years doing this. I'm not very concerned about their ability to do this. The biggest risk is actually on the person doing it. Like I said, if you cancel it, if your cash flow isn't there, if you don't understand the system, these are the risks. The actual technical fundamentals of the life insurance policy is going to work, right? The person, they might screw it up. This is another one too. You're probably going to see some of these videos on YouTube. Is Infinite Banking in Canada a scam? Infinite Banking in Canada is a totally legitimate financial strategy. There are some financial advisors out there who try to sell these things to make a buck, and they give the rest of us a bad name. How do you know if somebody's legit? You want to work with somebody who is an officially licensed by the Nelson Nash Institute to ensure that you're working with somebody who knows what they are doing. So infinite banking is a concept that was developed by Nelson Nash in the United States, and it's been adapted and implemented by other financial professionals in Canada and in other countries. To look somebody up, you go to the website infinitebanking.org. That is the only official website for it. And you click, there's a big button that says find a practitioner near you, and you can search for wherever you live. We've been listed on there for years. It's actually under my business partner, Robert Trasolini's name. So if you search for Robert Trasolini, you'll see that we're there. The reason it's him, well, because their system only shows one person per company. So that's why he's on there and not me. Anyways, he's the one you want to work with. He's the smart one. He's the one you will work with if you work with us. I'm just the funny looking one who makes YouTube videos. Next question, can I access the cash value of my life insurance policy at any time? The answer to this is basically yes. You can access the cash value of your policy as soon as there's any cash in there. Now, different companies in Canada have different rules. Some of them you can take policy loans after the first 30 days. Some won't let you take a policy loan before 12 months. So you want to know which one you're dealing with, and there's pros and cons to each. We generally coach our clients to start taking policy loans after 18 months. The reason is that you want to properly capitalize your cash value before you start taking policy loans. Let me give you a quick example. If you were a gardener and you're going to plant a seed, you don't plant the seed and then tomorrow expect to chop down the tree and eat the fruit, right? You got to plant the seed, you got to take care of it, you got to let it grow, you got to let it fruit, then you can eat it. You don't plant a seed and chop it down tomorrow. The same with these policies. You don't want to put the cash in and turn around tomorrow and try to take it out right away. If you do that, or if you need to do that, it's actually kind of a red flag for us because, like I was saying at the very beginning, you should have solid cash flow. You should have solid money fundamentals before you do this. It would be a big red flag if you were very desperate and needed to take the cash right away. So which is why we traditionally will tell people wait 18 months. 12 months works as well, like if you really got your stuff together, but capitalize it first before you start to try to use it. Another good question, how do I get started with infinite banking? Well, number one, it is important to work with a professional who can help you, figure out if this is even right for you, if it's right for your individual financial situation and for your goals. Then you also want to work with somebody who is officially licensed by the Nelson Nash Institute. So you can look them up on the infinitebanking.org website. That's how you know if they know what they're doing. As far as us here at Safe Pacific, we are very straight up and we will tell you if this is a good idea or a bad idea for your situation. We actually tell a lot of people no. A lot of people are not in the right financial position to set up an infinite banking policy, and that's totally fine. So that is a few of the big questions that we get all the time. That's it for today. So if you're interested in seeing if the infinite banking concept can be right for you, message us on any of the social platforms, or you can go to our website, safepacific.com, send us a message there. Somebody will reply to you within 24 hours on business days. That's it for me today, and I will see you next time.